Monday morning, folks. A very warm welcome to all of you, and welcome to a new episode of the Finmet Mondays podcast. Joining me today is once again Ronan Manly. We saw last week that gold was benefited a lot by the safe haven demand from the Iran-Israel conflict. I think the first question everyone has is for this week, where are prices looking likely to go? What's that level that you think gold is likely to break?
We now see that there's a geopolitical risk premium and a war premium on top of everything else we already have. But everything is creating a perfect storm that can push the gold price up above its all-time high. So the all-time high of 3,500 in April could be pretty quickly breached now in coming days because of the uncertainty and the potential for escalation of this Middle Eastern war and geopolitical risk.
You spoke about the Iran-Israel conflict, and I wanted to go a little bit deeper about that, right? Um, we already have seen over the weekend there have been escalations on both sides. Do you see more escalation and as a result, more increase in gold prices very likely? Or you might see a possibility that that situation could de-escalate and we might see a little bit of a consolidation in prices of gold.
I think there's a possibility of de-escalation, but it's not really a very high probability compared to an escalation. I would say I give it like a two-thirds to one-third ratio of escalating rather than de-escalating, because the United States can easily become involved in a direct way, and we probably see that within the next 48 hours. Also, when that happens, with the tit for tat or the two-way flow of missiles and ballistics and the threats that other military bases of different countries could become involved, like British and French, and there's a lot of warplanes being lined up in the Gulf and in that whole area. I would say that it is going to escalate.
Last year, Ronan, silver had a very opposite reaction to gold. We'd seen silver break these highs of 35 levels, and we said silver is on its way to, reach 40. But so far, last week, it has consolidated. It has kind of fallen back. Where do you think the issue lies with silver not being able to register the same highs as gold has?
From the beginning of January for the year to date, we saw gold take the lead and silver follow. It seems to be that's going to be happening now again. So for the first 3, 4 months of the year, gold took the lead and silver took a while to follow. There was a bit of a delayed reaction. And we saw last week where silver did catch up and it had been down into the low 30s and it hit 33 and up past 36 again. So the gold silver ratio, which had been maybe 110, above 100, then went down below 100, and the momentum of that carried it down to the low 90s, the gold silver ratio. And again, I think gold is now taking the lead again because it's a monetary metal and it's the ultimate safe haven. And you can see that during the week, officially, the gold as a reserve asset became the second most held reserve asset by central banks, other than the US dollar, and it's now ahead of the euro. So gold is acting as the preeminent safe haven asset that doesn't have any counterparty risk. And with the war premium now and with the geopolitical risk in the Middle East, silver is a sort of a dual role asset. It's a monetary asset, but it's also an industrial asset. So the industrial demand supply situation is important more for silver than for gold.
Agreed, agreed. Thanks a lot, Ronan. Let's see how the markets play out. But till then, thank you so much and goodbye.